Hey everyone, thank you for joining this week's Tea and Crumpets. I'm Gloria S, Crump, the Queen of Real Estate with the Coastal Leaders Realty Group. And again today we have a special guest. It's Tanner Gorum with the First Trust Home Loans out of Gulf Shores, Alabama. So thank you for joining us today as always. Yes. I think this is what, the third time? You're a regular now.
I am.
Yes. So obviously we're going to talk about rates. And so, coming into 2024, there was a lot of speculation that we thought that we were going to see a few rate cuts, and we have not seen those. So what is going on?
So at the beginning of the year, the Fed said, we can expect 3 to 4 rate cuts this year. And
we thought because of election year.
Yes, election year, rates are going to level out.
Yep.
And then at their meeting last week, you have the inflation reports come out and jobless reports and all that stuff. And they said last week at their meeting that we could expect maybe 1 rate cut this year. So
that's a little bit of a letdown.
It is very much a letdown.
But if you look at the history of interest rates, it's still not that bad. We just got very spoiled.
2020, 2021 spoiled everybody
because
they got used to the 2-3% rates.
Exactly.
Those are actually historic lows.
Yeah.
So where we're at now is kind of pretty much in the middle of where they historically have been.
Yeah, because it's really, they haven't, if you look at it, especially in the 80s, when they were in definitely double digits and plus, I was a mere baby, but still, I do hear about these stories, so they're not terrible, but yeah.
So it actually, I did a little note here because I've seen this floating around Facebook and things like that, but it says in 1971, mortgage rates were on average 7.33%.
Yeah.
If you waited to buy until mortgage rates went down, you would have waited until 1993. So that's 22 years that you would have rented. You would have almost had your mortgage paid off.
That is true, actually. Yeah, on a 30-year loan.
Yeah. So,
wow.
But during that time, real estate quadrupled. So people didn't buy because of rates, but the value kept going up. So once they finally did buy, they're actually paying more in the long run.
Exactly. And so you even wrote in here that during that time the interest rates peaked at 18.1%.
Yes. Yeah. That was in 1981. I'm sorry. It was 1987.
1987, yep. And I remember that. Not personally.
Yeah.
Reading about that.
Right.
And like you said, renting is not the American dream. Homeownership is.
Right.
So you don't look at the big picture.
Right.
And you look at the historical data on interest rates, we're really not that bad.
Right.
So.
Right. And, we're 2 years into this now. People keep saying, well, we're just going to wait till rates go down. We're just going to wait till rates go down. But values are still increasing. So while everyone's waiting, the value's going up. So really in the long run, you're not saving any money necessarily. There's the saying, marry the house, date the rate.
Yeah.
So if you find a house that you like, buy it if you qualify.
Exactly. If you can make it happen.
Exactly. And then there's always the option to refinance.
Exactly.
But if you wait it out, then that value is going to continue to increase.
Yeah, you can always do a cash out refi if you really,
Exactly.
with the cash, with all the equity that's in there.
Correct.
And then too, like you wrote in here, the higher rates actually is more beneficial for buyers.
Correct.
Because you can negotiate
seller concessions, and those seller concessions can pay for all of your closing costs plus prepaids. So that's
discount points.
Correct. So you can buy that rate down. Let the seller pay for you to buy your rate down.
Exactly.
And this is what I tell a lot of agents too right now in this market. Instead of dropping the purchase price, offer more in seller concessions because that's more attractive to the buyers.
Exactly, with the interest rates the way it is, and just even with our condo, you can't do a buy down rate it has to be a primary.
Correct.
So when we're working with investors or second homeowners, they can do the discount points.
Right.
And so, and then that will help with people. You have to offset, the rental rates and things of that nature, and help try cash flow if it's possible.
Correct.
And so, and then let's see, what else?
Well, I was just gonna say, I have money to give away. That's
Oh, I
my
love
job. I'm in the
that.
business of giving away money.
I love
So,
I'm a great recipient.
yes.
Uh,
So let's just, contact me and let's see what you qualify
Yeah.
for. And, there's always the option to refinance later, but at least you're getting the house you want.
Well, and two, when they're talking to you, you can always talk about like, well, let's say I wish the interest rates were 5%. How much are we looking at that for the seller to have to be able to purchase? So
Right.
they can go ahead and discuss their game plan with you with, okay, if you buy property at $400,000 and you want the interest rate to be X amount, then we need the seller to contribute X amount towards
Right.
the discount points.
Right.
So that way, if they're saying, oh, I want to just wait till the interest rates drop, we obviously thought that was going to happen this year. It's not. It very well may. I think they're just now teasing us.
Right.
So.
Well, and one thing that we're seeing a lot of right now is I ask my clients up front, even if you qualify for, a $500,000 home, what are you comfortable with your monthly payment being?
Yeah.
So let's look more in that and let's not max out how much you actually qualify.
Exactly.
Let's look at somewhere that you're comfortable paying monthly.
Yes. And when I'm showing property, people are like, oh, well, my max is $500,000. What they're looking for very well could be a $350,000 house. And especially with people who are coming from other areas in the country, they don't really know how great our prices are sometimes until they actually go and personally see it.
Right.
And so it just tends to blow them away. They're like, oh wow, if I were to buy this property, it'd be double where I am. And then our taxes are obviously
Way lower than other states.
So, I mean, we have a lot of incentives there. I mean, just to entice people to
probably a lot of the reason so many people are moving to Baltimore.
Yeah, for sure. So, and then, so obviously we'll have her contact information so that way they can see what they qualify for, what we can work with as far as closing costs for the discount points and buy down rates. But also you do co-marketing.
Yes, so we have many different ways to do that.
This is for with the other realtors.
Yes, so marketing with realtors.
Yeah.
So we have our mobile app where we can co-brand it to you and I. Like if you're out showing property to a client, and you're like, "Were you pre-approved?" And they're like, "No, not yet." You can text them directly the link to apply, and when they go in to apply, it's automatically going to be co-branded with your picture, your name, your contact information. We can even go as far as if you have your own website, we can put it on there so they can go on there and click and look directly at properties and stuff like that. And then there's also the option of, open houses and things like that where we can co-brand flyers and stuff like that.
Well, the good thing is that y'all have an app that, people who are looking, they can easily get on there. So it's obviously very streamlined and easy.
It's very user friendly.
Yeah.
You go on, you fill out the application, and then you actually can download your documents directly to the app.
Oh wow,
so
that's awesome.
It's got, you can put drop files in there, or it's actually got a scanner, so if you have your documents in front of you, you can scan them and they'll upload directly onto the portal.
Okay.
And it's obviously secure.
Yeah,
so
that's great. Well, that's so easy because everybody's always on their phone, not necessarily in front of a computer. Yeah, well that's good, especially when I'm out showing property. If they see something they like that they may think, oh, I don't know, it might be a little more than we can possibly afford. They can easily reach out.
And there's the calculator on there too, so they can kind of put in there, and get an idea of what their monthly payment might be.
And that's great about the whole open house stuff.
So yeah, we can co-brand on flyers. Obviously, I will be there with you to answer any lending questions that people that come in might have. And then there's the more exposure on the social media side too.
Oh, good. So we love that.
Yes, we do.
Yes. And then too, do you have where it says the insurance quotes? Or?
Yeah, so a lot of times, like when I'm going to an open house, I want, people are obviously going to ask me, what is my monthly payment going to look like?
Yes.
And as most of us know, insurance has been a little crazy the past few years.
Hopefully that's going to start.
But since Hurricane Sally, but really nationally, insurance has been,
especially in Florida.
Yes. It's gone up a good bit pretty much everywhere.
Yeah.
So people are still thinking, my insurance is going to be $1,000 a month.
Yeah.
Or I'm sorry, not a month, a year premium or whatever, when really it may be $2,000, $2,500 or whatever.
Exactly.
So I like to go in with an insurance quote too, and just so we have an idea of how much insurance on that property is.
Oh, that's
going to be
great.
for the client.
Well, that's good, but then there's no surprises. It's not a huge letdown.
Right.
So that's good to know. And so, well, that's awesome. Well, I'm excited. I like the app idea.
Yeah.
That's great. So, and then, and I appreciate all the information on the rates and stuff. So I'm very, so when's the next meeting? Do you know?
The next Fed meeting?
Mm-hmm.
I do not know. They just had one last week.
Oh, that's right. So,
So
it's gonna be a
that
little bit.
was, I
Hopefully,
think it's in June. I think it's the first week of June,
I
actually.
think you're right. So, well, hopefully, you know, we'll have a little bit of a discount. And so, yes. And then, but yeah, well, I'm excited that you came and informed us of everything that's going on, and especially with the co-marketing. So you'll have to help me out with an open house here soon.
Absolutely. No,
Awesome.
I will.
Yeah,
Thank you so much for having me.
And thank y'all for watching, and we look forward to seeing you next week.
I just figured out we